let's get more on the political sentiment shift that we're seeing that's led to the election of Trump and Brexit, and what that could mean for the global economy and the markets. And for that, we're joined by David Nelson. He's the chief strategist for BellPoint. David, good to have you with us.
Thanks for having me.
So David, let's talk about this Trump bump, because markets have hit all-time highs ever since the election. Investors obviously banking on those campaign promises that he made, including infrastructure spending, tax cuts, loosening of regulations. Can this continue, though?
Look, it feels like the markets have exploded out of control since Election Day. But since then, really, the broad indices are up about 3%. The real action, like you've pointed out, is really beneath the surface. This rush out of the safe haven trades, the utilities, the consumer staples, fixed income, into more cyclical areas like the banks on the prospects that regulation is going to pull back, and infrastructure spending, which helped the industrials. But, I'd like to note that, banks were doing pretty well prior to the election on the prospect of higher rates.
Right.
And the Fed is very likely to raise rates at the end of the year. So I think the run of the banks, while there's going to be a reversion to the mean at some point, I think there's going to be more to go next year.
Well, they've been doing well. Interest rates more than likely to go up come December.
That's good news for them.
That is very good news for them. But also, as we said, this promise of loosening regulations. How much of that is within Trump's actual power? It is the executive branch that deals with regulation, but can he actually make sure that happens?
Sure. Look, in the United States, we elect a president. We don't elect a king. So a lot of promises, he'll try to achieve those. Still going to have a House and a Senate, and the last time I looked, there's still a fair number of Democrats out there. They're going to fight some of this legislation and roll back of Dodd-Frank and other things like that.
But he does have control of all three branches.
He does have control. I think I would temper some of the prospects somewhat, but I think you're going to see some pretty big advances in the coming weeks and months.
Well, David, what was interesting is that everybody was saying, should Trump win, expect chaos, expect a massive sell-off. We did see some red across the board in those initial hours. But what a massive turnaround. Why do you think there was this total change of attitude?
I think the bookies got it wrong, just like they got it wrong in Brexit. It was a pretty scary evening. I mean, at one point, they had a whole futures trading. We were down over 900 points. And by the morning, it was looking pretty good. I think what saved the night, that night was a very tempered speech from the president-elect, then concession speeches that followed. I think we would have had a rally no matter what.
No, I mean, because everybody was saying, with Trump, there's uncertainty, there's
even
volatility.
With Hillary, we still would have had
expect.
a rally because the uncertainty was gone. I think the rally's gone much further because these are pro-growth policies, and the market really needs that.
But I was thinking that because we don't know what was going to happen with Trump and because of the uncertainty, that we would see the market sell off. So has that sort of sentiment completely evaporated now?
I wouldn't say it's evaporated, but I think, the stocks speak for themselves. You've got indices hitting all-time highs, and some sectors of the economy that have been dead as a doornail for the last 5 years are starting to show signs of life.
Well, what's interesting is that a lot of the banks, a lot of the institutions, a lot of the economists are making their forecasts for the S&P much better, and also raising their forecasts for GDP for 2017 and for 2018, most by at least 0.5%.
I think part of that is the Trump effect, but we had some good news today. You talked about it earlier, that 3.2% that we got, the revision for the third quarter. Analysts are going to have to bump up their estimate for the fourth quarter. We had a blowout number in consumer confidence today. So the economy wasn't as bad as we thought in the first place. So you put some of these pro-growth policies in place, and you can get a bump to GDP.
But what's going to happen with the Fed raising rates in December? It's favorable for the banks, but not favorable for everyone. What impact would that have on GDP and these forecasts?
Well, it's favorable for savers. Look, in my estimation, my humble opinion, Fed is behind the curve. They missed their window all the way back in 2013.
At least you're consistent, because you've been saying this for a while now.
I've been saying it for a while, and others have been saying it. They really, the rhetoric you're hearing from them, not me, from them right now points to a rate hike. The only thing that would take that off the table would be an absolutely disastrous employment number for coming up.
But how is that rate hike going to impact GDP in the next quarter or so?
I don't know that it impacts GDP, but it certainly gets the Fed out of the way.
Right.
It takes some of the easy money for corporate, for the last 5 years, CEOs have been using cheap money to buy back stock. Maybe they'll start to put some of that money to work in a more formidable place like that.
David, I want to touch on some of the not so positive Trump associations and their impact on global growth and the markets globally. And of course, that's his position on trade and his protectionist stance. TPP, dead on arrival, renegotiated. How's that going to play out?
I think it's going to play out better than expected because, one, I think he's a negotiator, and this is the art of negotiation. You come out with very hard rhetoric like that, and you force the other side to capitulate somewhat.
You don't see that hampering global growth in a major way should some of these policies come to fruition?
No, in the end, trade will go on. A threat of a tariff. Look, President Obama used tariffs. He hiked the steel tariff, well over 200% on Chinese steel. So he's not the only person who sees the advantageous use of some tariffs. I think he has to threaten some of these issues to get people to move. And we'll see how good a negotiator he is. He says he's great.
The art of the deal. He
hoping.
did write the book. I want to quickly touch on what's happening across the pond. Things are heating up in terms of finalizing negotiations with Brexit. What's your take on that?
I don't think Brexit is going to be as bad as thought. Already the OECD has come out and said it's not going to be as harsh as they thought. In the end, these countries have to sit at the table. They've got to get something done. The EU should focus less on the fact that Great Britain left and worry about their own house. Britain is not the last to pull this string.
Well, that's what they're hoping, that if they're harsh enough, they'll disincentivize any other members from leaving.
I don't think it'll work.